Let's find some day trades, swing trades, and option trades. Hello, traders. It's Monday morning, August 10th. We are 3 hours into the trading session. We can expect Mondays to be pretty quiet. This is one of the dullest times of the year. The reason for it is that we're on the tail end of earnings season. Over 90% of the S&P 500 is reported, which, by the way, revenues are down on average about 11% in Q2. Profits are down about 33%. Not a good quarter. Everyone is looking past this as a one off event, that we're going to have a V bottom recovery. Lots of stimulus coming. President Trump extended the unemployment benefits by about $400 per week. Congress is trying to get a stimulus bill done. This is minimally what they wanted to accomplish. So they're also challenging whether or not he has the executive power to do so. But in any event, there is going to be a stimulus bill, so it will help bridge people who are currently unemployed as the coronavirus expands. We're over 5 million cases now in the U.S. We've got a lot of companies that have been very, very slow to reopen. This recovery is going to be sluggish. It's going to last a lot longer than anyone had hoped. It's certainly not going to be a V bottom recovery, in my opinion. So things should gradually improve, but over the course of the next 3 weeks, we have a lull in the economic data. We had all the jobs numbers, ISM manufacturing, ISM services last week. I've got to say, the ISM numbers, they came out quite good, very robust. We also had a decent export number from China last month. Their imports were light. That might suggest that there's some future problems there. Tensions between the U.S. and China are escalating. Both countries have forced one another to close consulates. Both of them are sanctioning leaders. We've removed the favorable trade status for Hong Kong. So the tension is definitely starting to rise. 2 years ago, this would have been catastrophic for the market. Right now, investors are numb to all of this. Plus, they see that the election is coming up in a few months, and perhaps there is a chance for that tenor to change. So I don't really see that impacting the market greatly. We've seen the news. U.S.-China relations aren't having an impact. We've got earnings season is at the tail end. 90% of the S&P 500 is reported. Revenues are up on average they're down on average about 11%. The profits are down about 32, 33% on average. Not a good quarter, but everyone's discounting that, expecting Q3 to have a nice, solid, robust recovery. I don't necessarily see that happening. This recovery has been much more sluggish than we had hoped. You had a very concentrated rally in a handful of tech stocks. Now we're starting to see a bid in the laggards. That typically tells me that we're near the upper end of a leg, a bull market leg. So I think that we need to be cautious. Here's the action today on the S&P 500. You can see how the market gapped higher to a new relative high. These opening gaps higher to a new relative high are very vulnerable to profit taking and to gap reversals. Hello. It's exactly what happened. We had the 1OP indicator crossing right here. You can see how that marked the high of the day right there. I told everyone we need to be cautious out of the gate here. Let's see what happens. That was a bearish cross, so it told us that we needed to really temper our long positions. Got a nice big sell-off. 1, 2, almost 3 long red candles in a row. Typically, when you see action like that, it is a bad sign. It's a sign that this sell-off is going to have legs. But we're in a very choppy market right now, very quiet market. So market instantly bounced back, had a beautiful 1OP cross right here, was telling us to start loading up on some of our longs. Been making great money today. The only open position I have right now, I entered early and I pay the price for it. Sometimes when you buy stocks right out of the gate that are super, super strong on a gap up, let's go into the NKLA daily chart. You can see how it bounced off the 100-day moving average. It gapped through this horizontal resistance here. It was in this gap, so I had lots of reasons to want to buy it right out of the open, and the stock pulled back. I should have heeded the warning on that 1OP indicator right in here that we had that big spike, but I didn't. I thought this stock wants to run. I'm not going to wait. I'm going to at least get part of a position off instantly. Market pulled back, so did the stock, but I did add to the position. So my average cost on NKLA is just north of $43, and I have a limit in to sell it for approximately $43.50. We'll see if I get filled on it. I like the price action in here. The daily chart on NKLA looks good to me also. When you're trading, you need to know what your time perspective is. In this particular case, I've told you why I like this chart on a daily basis, on a swing basis. In almost every instance, I like trades. I have to like them on a swing trading basis before I will day trade them. That gives me the latitude to weather a storm like this and to consider adding on the position when I find support, which it has done, and now it's starting to rebound. So I do like the stock. It's a very volatile stock. I like it technically. I'm not really following the fundamentals on it, but I do feel that it's got a chance to bounce in here. So my objective is to try and take some profits and get out of this trade sometime today. But apart from that, I've had 7 other trades, 7 winners. So some of the trades that I've gotten into, ZNGA, that was a short that I took early in the day. You can see this nice selling here. We also had a very weak market, so this stock looked primed to come in. Also on a daily chart, you can see that weakness trying to get through this horizontal support level. Had a big bearish candle off of that high right there, closing on its low, gap lower, follow through today. So that looks like it's setting up to be a decent little short. Other than that, I've really been trading the long side. Boeing I got into early this morning. I still like it. You can see this downward sloping trend line right here that's been violated to the upside. Stock bounced off the 100-day moving average. I like this move. I think BA could have some legs. Longer term, company has issues. Airlines are going to be struggling for a long time. This is not my favorite type of stock to hold overnight for a swing trade. Do I think that it's got some short-term legs in here? Yes. Would I be overly anxious to swing trade this overnight? If the stock is able to continue to grind higher and it closes on its high of the day and I get a nice market that closes near its high of the day, sure, I may hold BA overnight, but I would not be taking longer term positions in this company. Still think it's got a lot of issues, but for right now, yes, it looks good. Let's look at that 5-minute chart. There you can see it's compressing near the high of the day. Market has pulled back right in here. Stock has basically been compressing, so I feel that on any market strength, it should be able to move higher. You can see that that was the market decline right there. The stock did pull back with it, so it does have pretty good correlation to the market, but it does have some relative strength also. D1 chart looks pretty good. RCL would not want to hold this one overnight. Do not like the backdrop for cruise lines, but I do like that technical pattern today. I like the fact that it also is through this downward sloping trend line. It also has bounced off the 100-day moving average. You can see how it's on the high of the day. I've been in and out of RCL a couple of times. I had a 40-cent gain on it. I had a 70-cent gain on it. So really nice. You can see here when the market was going down early today, this is an overlay of the SPY. Market crests, has a nice sell-off. What does it do? Boom, boom, boom. That's when you know that you can buy this stock. It wants to go higher. You can see the big sell-off right here. What did the stock do? It compressed. It didn't pull back with the market. When I see that and I wait for market support is established. We got that bullish 10P cross right here. You can see on the right-hand side where my cursor is. That tells me, hey, I've got a bullish market formation right here. This is when I want to go out and buy stocks with relative strength right here. Took a 70-cent gain on it. That's not bad on a $55 stock. That's how we do it. We wait for things to set up. And these searches help us identify the best opportunities. So right now, for instance, we can go into relative strength 30. These are stocks that have been strong over the course of the last 30 minutes. What's the market done in the last 30 minutes? Down, 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 down. Hey, these stocks want to go higher. This is probably where I'm going to be looking for my opportunity. There's one right there, NVDA. Nice strength here when the market's been going down. It wants to go higher. So would I buy that right here? Pete, is this it? Is this the one? Do I buy? Now? Now? No, I don't think I would buy that right here because I prefer to buy stocks that are through their high of the day and through the prior day high. This stock has neither of those two characteristics. You saw heavy selling on Friday, a big whiff this morning. Stock was down with the market. No, I don't like it. I want strength. I don't want to buy dips. I want to buy strength. You hear my analogy? If you watch enough videos, I want to have Barry Sanders at the 50-yard line with with the football and no one in front of him. Hey, here's one. Look at Target. Look at that beautiful, strong rally on Target Friday. Market down, down, down today. What's the stock doing? Compressing. Hey, stock is getting above the high of the day. Stock, see, there's the big sell-off in the market right there. Just put the overlay up. Stock holding up extremely well. Soon as the market starts to rebound, boom, we're through to a new high of the day. Awesome. Here's another nice little pullback in the market. What's the stock doing? Compressing, holding its own. Above the prior day's high, above the high of the day. Hello. That's where you want to be in. Set your target, take your profit, know that the market's not really going anywhere. We're in a kind of sideways pattern right now with no news to really drive the market. It's within striking distance of the all-time high. We're going to start seeing some resistance in there. Target's the kind of stock I'd be looking for. Let's take that SPY overlay off, toggle on, toggle off, go to D1 chart. Aha, yes, beautiful little breakout right here. Nice. Target's the kind of store that sells food. They've been open even during the coronavirus. Similar to Walmart, these retailers have done well. So yeah, I think Target sets up pretty well. This one, wouldn't touch it. I don't care if it's got relative strength. That is a bearish chart to me. So you've got a few stocks that you need to click through on this relative strength 30 search, and it didn't take us but a minute to find Target. That's one that you would want to be on. Take a look at the market here, see what we got going. So we've got a nice little market rally off the low here. We have a bearish 10P cross right here, which told us that if we're trading from the long side, and that really is the way that you want to approach the market right now for day trading, still very, very short to make money, very, very difficult to make money on the short side because the market is in an uptrend. So you don't want to be caught on the wrong side of a market move. Your best strategy right now is to wait patiently for these big drops, wait for that 10P cross, go in, take a look at your bullish searches, try and buy those stocks that are strong relative to the market. Market runs up, you start getting a little heavy on the 10P indicator with a bearish cross, take profits on your stocks. Wait for the next dip here. Now we got the market challenging that high right there. Let's see if it can get through. Maybe we're going to have a little mini double top and it'll roll over. When you see 3 red bars like this in a row, 4 in this case, typically on big moves like that, that was a 20-point S&P move. Typically, you are going to have a little bit of a bounce. Typically, half of that last red candle is going to be preserved, and then you will roll over and still try and find support. Very strong momentum on a move like that. When you get an immediate bounce, we're back above the open of that last red candle. Instantly, within 4 bars, that told me, okay, this is just a head fake. Now we float back into the range, and now looking back, you can say, yep, this is just noise. This is just the type of volatility that we're going to see over the course of the next few weeks when there's no news to trade off of. It tells you that you need to be very careful with your longs. You can't just go in and assume that, boom, here we go, gap to a new high, market's going to continue to grind higher. You've got to watch the 10P indicator. This is our gauge. Let's take a look at NKLA, see if that's starting to improve at all with the market running up here. And that stock is still looking a little sluggish, but I think NKLA is going to be one that you want to be long. I think I'm going to make that the featured stock today for day trading. And if it closes on its high of the day, somewhere around that $44 level, and if the SPY closes on its high, I think you can hold it overnight. I also like TGT. That sets up well. Let's see what else we've got. This heavy buying list, this is the list I like to use right on the opening bell. It shows us super heavy volume. It shows a strong momentum, relative strength, and we'll knock through a few of these stocks. FedEx has been super strong. I feel it might be getting a little bit ahead of itself. So for an overnight, usually doesn't make big moves like that, but that's a nice upward sloping trend line. Breakout to a new high, closing on its high of the day, gap higher again. This is one that we're looking at Friday for some possible lotto trades. RCL, we've covered that one. When you have all of these laggards starting to rally, and we need to see a rotation into the other stocks, we can't have a market rally that's predicated on 10 giant tech stocks. That's not healthy. We need to see a rally into some of the industrials, some of the energy stocks, some of the laggards. Until we see that, I think the market is very, very vulnerable to profit taking because we're not seeing broad-based business recovery. So hopefully this little mini rally that we've got in the laggards is not just indicative of a blow off market rally, that there's actually something to it. So on a swing basis, I am right now in cash. On a short-term day trading basis, I'm in and out of stocks. I think that the course of the next 3 weeks is going to provide us with clarity. We're going to see improvement on the coronavirus side. Hopefully, we'll see some economic recovery. We've got to watch those initial jobless claims numbers. But for the next 3 weeks, I really don't see a reason to have a lot of overnight exposure because we can expect choppy market conditions. And who knows what news might come out. I think that we're going to have a better entry for longer term positions sometime this month, and that might even include a market decline. So if we see any kind of drop, then we'll be evaluating support. I think we'll have a much better opportunity to enter. So if you're swing trading, you can do so on a very short term basis, meaning you're in the stock, you've got a nice gain in the stock, you got the market still closing on its high, you can hold it overnight, look to take profits the next day. So I would keep my swing trades very, very short, holding them only maybe 1 or 2 nights overnight to try and catch some of these moves. So let's keep taking a look at the list. You can see Caterpillar, another cyclical stock, actually doing well. As you glance down this list, you're going to see FedEx, cyclical stock, Wynn, Casino, cyclical stock, RCL, cruise ship, SPG, Simon Property Group, mall operator, cyclical, Caterpillar, cyclical, UPS, cyclical, LYV, Live Nation, concerts. Hasn't tended to be cyclical as much, but it is right now, especially with the coronavirus. Las Vegas Sands, cyclical, casino operator, MGM, cyclical. UAL, airline, all the laggards. Look at this list. That's where all the action is right now. Is all these laggards are starting to catch up. That means that some of the money's coming out of tech and it's going into the laggards. That would long term be positive if this is sustained. On a short term basis, if it's not sustained, then we can expect a market drop. Let's go and take a look at the SPY very quickly, see what it's doing on a daily basis, get our macro picture here. There's the all-time high right there. You can see we are 40 S&P points away from the all-time high. And you can see these tiny little candles here, tiny little bodied candles. We're just floating higher on the notion that there's going to be a stimulus plan right now. So you don't want to stand in the way of this trend. This is a very, very strong 3-month bullish rally, so you don't want to be early with your shorts. You've got to see a technical breakdown before you can get short. And I'm kind of liking this 324 level that's setting up. So you've got this horizontal resistance right here around the 324 level. That's coinciding with this upward sloping trend line. So if 324 is breached on the SPY, all of a sudden I start getting very, very interested on the short side and I start watching. That also would be our first natural support level for the market to pull back to and to find support. So until then, just let the market float higher. Try to favor the long side when you're day trading. If you get into a really good swing trade, you can hold it overnight as long as the market is not showing any signs of strain. That's how you can milk the last leg of this rally out. The key that I'm watching for is late day weakness with follow through the next day. If we start seeing that and we see that pattern for more than 2-3 days in a row, that'll be a sign that there is some profit taking. Bullish speculation is really high right now. And when bullish speculators get flushed out, you see moves like this. Here we go. Look at this. Oh, we're off to the races. Oh my gosh, this is great. Look at this rally. We're through the high. Woof. Gigantic drop right like that. Everything looked beautiful right here. You've got people buying calls, buying calls, buying calls. Then the bottom drops out and they start to panic. They go, oh my God, I'm in a bad position. They start selling their long call positions. That fuels the move lower. They get flushed out. We want to be the ones who are picking up the pieces right here and right here because that's the reward on the backside. So right now, we're at a juncture that's pretty close to this. I see keeping your overnights very, very small. So let's see if we can find another good trade in here. I have shown you a couple. I like Boeing. I think Boeing could actually have some legs. And let's take a look at that. It's also in the S&P 500. So, and other major indices. So I think that it could start to move higher. SRNE is a stock that I traded earlier today for a really nice gain. Had a 40-cent gain on a $17 stock. That was pretty sweet. You can see it is a high flyer. So this is not one that I would hold overnight. But when you've got momentum like this, and you've got momentum like this and relative strength, 1, 2, it's almost like a cup and handle right here with a stock trying to get through the high of the day. I think that sets up well early in the day. And we'll take a look at that one more time. And we'll put that overlay of the SPY up, and I'll show you why I bought it early. We had this drop right here off of the high. Stock continued to move higher. This is where I got in, set my target, took my 40-cent gain. Even with the market falling like this, you can see how the stock made a new high of the day. That is fantastic relative strength. That tells me that buyers are aggressive. And now it's been gradually floating higher, making a series of higher lows. SRNE looks good today. So I've given you some pretty decent stocks to take a look at. We'll click through a couple more. I'm going to try and find ones that are not cyclical because most of these are AA, Cyclical, CCL, KSS, Retailer. MOS is somewhat a cyclical stock, but I really like this one. I think I might have shown it on Friday. It is a fertilizer producer, and you can see this breakout here. You can see it above the 200-day moving average. That's got some nice momentum to it also. Not a huge mover, but I like this nice consistent move. We had a pot stock announce earnings overnight. CGC. And there you can see earnings before the open. It's above the 200-day moving average. It looked stronger earlier today, and I thought we might see some overflow. So you can see the gap there. 1, 2, 3. It's been able to hold that gap. I'm not that excited about it, but TLRY announces after the close today. This one could be interesting. You can see the A, that's after the close, going to the D1 chart. You can see how it's trying to bounce above this 100-day moving average. So what do I do with a stock like that? I click GTC. I click the top of that candle right there. I click the top of that candle right there. Now I've got my downward sloping trend line, whether it happens off of the earnings report overnight or it happens a month from now, 2 months from now, I don't care. When that downward sloping trend line is broken, I want to know about it. I'm going to get a pop-up alert. Could be an opportunity for me there. I don't like to hold over earnings, by the way. I found that to be basically a 50-50 proposition for me, even after trying it for 13 plus years. And if I look at the amount of time that I could have spent evaluating other opportunities, it ended up being a waste of time for me. So if you like to trade earnings, you can take your chances on that one, but I am going to wait until after the number. Plug, still doing very well. That was a stock I showed you last week. Downward sloping trend line, breakout to the upside, gaps higher after earnings, takes out the previous relative high, continuing to grind higher. I think PLUG also looks good. Nike had a nice breakout. Even though retailers may be closing, they're able to sell their product online. You can see this resistance level right in here comes to that 105 level. Big rally today. It gapped higher and then it just sat there. And now it's starting to get some legs here. Gapped higher, pulled back, and just sat there for a while. Now it's got its legs though. I think Nike looks pretty decent. It can continue to move higher as well. So that's all I've got for you today. I've given you some really nice stocks to take a look at. How would I approach any of these? Let's see here. On Nike, you may be able to come in and sell an out of the money bullish put spread keying off of that. You'd have to go down to the 102.50 strike price. It's only at 106.35, so selling the 102.50 and buying the 100 puts, I think that would set up for a nice bullish put spread, and you would want that open today preserved, which it looks likely to do because this is a nice breakout with the stock near the high of the day. I think it continues to move higher. You could also evaluate if you can buy some options that are in the money that have very low option implied volatilities. You can buy calls on this one also. Continue to ride it higher as the stock floats higher and use that right there, that breakout, which that close was 104.29. 104.29 would be your stop. The stock can pull back to that, but you don't want to see it close below that 104.29 level. That's how I would play a stock like that. And that's it. Thanks so much for watching. Make sure you subscribe to the YouTube channel and turn on your notifications so that you never miss another one of these videos. I promise you, I'm going to have some great trade ideas in each and every one of them. We use the 1OP indicator to help us time our entry and exit, and then we use option stalker searches to help us find the best stocks so that we're not fumbling around looking for them. They are delivered to us on a silver platter. We're ready to take action immediately. We post our trades in the chat room. We share our opportunities. Thank you. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.